Most of us hate taxes. We think of them as just a boring way the government takes our hard-earned money to fund the military, fix bridges, and pave roads. That part is pretty straightforward. But what if I told you that taxes are actually a massive, invisible remote control for your brain? Taxes are the ultimate tool the government uses to shape the economy, redistribute wealth, and completely change your habits. With every change in the tax code, there are winners and losers. Welcome back. I'm Foxonomic, and on this channel, we explain complex economic concepts in plain, simple English using stories. This is episode 2 of our Economics and Governments series. If you want to master how the world really works, don't forget to hit that like button and subscribe. Part 1. The Magic Government Bonus. Let's start with a mind-blowing fact. For a lot of people, tax season isn't about losing money, it's about getting a massive payday. Take Lynn Matthews, for example. She works as a package handler at FedEx. While you might be pulling your hair out over tax forms, Lynn is literally singing because at tax time, she gets a bonus that can be more than $5,000. Often, that is more money she paid in taxes for the entire year. Lynn is one of nearly 30 million Americans who receive something with a very boring technical name, the Earned Income Tax Credit, or EITC. It is one of the biggest cash transfers in the United States, moving more than $60 billion from wealthier Americans right into the pockets of poorer Americans. And here is the craziest part. Pretty much every economist, right and left, absolutely loves it. Every president since the 1970s, Reagan, Clinton, both Bushes, and Obama expanded it. But why? To understand this, we have to do what economists call a mind flit. Traditionally, if you're poor, the government might give you food stamps, subsidized housing, or free government health insurance. But what happens if you get a job and start making a little more money? The government kicks you off food stamps and takes away your housing. From an economic perspective, you're basically paying people to stay poor. The architects of the EITC wanted to fix this. They wanted to help poor people and encourage them to work. So they designed a delicate equation. The more money you make, the bigger the bonus the government gives you. Take Miriam Ochoa, for example. She was working part-time at a bank, making only $9,000 a year. She was so broke, she had to tell herself no to buying French fries at McDonald's just so she could pay her rent. But because of the EITC, she got a $3,000 bonus from the government. 4 years later, when she was making $15,000, her bonus actually went up to $4,000. The peak sets somewhere between $12,000 and $20,000, depending on how many kids you have. With this money, Miriam paid off debts from her divorce, got off food stamps, went to school for accounting, and moved to a better school district for her son. Another guy, Ray Osorio, used his bonus to survive after spending his savings to start a luxury car service. Economists love this because it's a cash transfer. Instead of giving people in-kind transfers like housing vouchers or food stamps, the government just gives them cash and trusts them to know how to spend it best. Part 2. The Pizza Slice Rule. Marginal Utility. Now, you might be asking, why should we tax rich people to give cash to poorer people? In the United States, the founders didn't actually include an income tax in the Constitution. It wasn't until 1913 that the Constitution was amended, giving us a permanent progressive tax system. Progressive taxation means that the more money you have, the higher the tax rate you pay. Fun fact, during the last century, the marginal tax rate for the richest Americans hit up to 70% on their last dollar earned. On the flip side, we have regressive taxes, like a flat tax or a sales tax. If there's a 9% sales tax on a $10 bagel, that $1 tax doesn't mean much to someone making $1,000 a week, but it hurts a lot if you only make $100 a week. But the real reason we tax the rich to help the poor comes down to an Econ 101 concept called marginal utility. Think of it like slices of pizza. When you're starving, that first slice of pizza is the greatest thing in the world. The second slice is great too. But by the time you get to your fourth or fifth slice, you barely get any value out of it. That's called diminishing returns. Money works the exact same way. If you have a ton of money, an additional dollar isn't going to change your life. You'll probably just hoard it or save it away. But if you are low income, that single dollar has massive value. You will use it to buy food, or as we saw with the EITC, invest in a business or your own productivity. So our tax code reflects our societal values. We're using taxes to say that a dollar is simply better utilized in the hands of someone who truly needs it. Part 3. Taxing your bad habits. Okay, so taxes can reward you for working, but they can also punish you for being bad. To understand this, we need to travel to England in the early 1900s to meet a guy named Arthur Pigou. Pigou was a Cambridge University economics professor, a progressive Victorian, and a serious mountain climber who used to show up to fancy lunches carrying an ice axe. Pigou was living near London during a time when air pollution from burning coal was a nightmare. They called the thick smog London fog, or pea soup. It covered furniture in oil, it wrecked clothes, and it literally killed people and animals. Pigou looked at this and identified a massive problem that economists now call a negative externality. Here's how it works. Let's say I own a factory making socks. I have a private marginal cost. This is what it costs me to buy wool, pay workers, and run my machines. But my factory also burns coal and creates a ton of pollution. The cost of people getting sick, buying new furniture, and washing their clothes is the social marginal cost. The problem? Innocent bystanders are paying the price for my business. The price I'm selling my socks for is too low because it doesn't factor in the terrible stuff my factory does to society. Pigou came up with a brilliant solution. He created a graph in 1912, which, by the way, was incredibly confusing and hated by other economists at the time, but it changed the world. He said, we have to put a price on these problems. You have to force the guilty party to pay for the societal harm. Put the real cost of that harm right into the price of the product and let the market decide if it's worth it. Today, we call this a Pigouvian tax, and it is everywhere. Carbon taxes. Countries like Canada, New Zealand, and Scandinavia have figured out the cost of climate change and added it as a tax to companies that produce fossil fuels. Congestion taxes. In Manhattan, New York, there's a tax on cars that drive in certain crowded areas. The negative externalities were lost time, noise, and pollution. Once they added the tax, travel times actually improved, and the extra money is spent on public transit. But it's not just big corporations. The government uses taxes to nudge your behavior too. If they offer a tax rebate to swap your gas furnace for an electric one, that's an incentive that's good for the environment. We even have a famous tax deduction for paying interest on your home mortgage, which is specifically designed to encourage Americans to own homes rather than rent them. But here's the catch. People are clever. Sometimes these taxes have unintended consequences. If the government puts a tax on sugary drinks to lower healthcare burdens, people might just avoid the tax by buying something else that's bad for them. So the next time you look at a tax form, don't just see it as a math equation. See it for what it really is. Taxes are the ultimate tool of the government. They are a mirror reflecting our societal values. They dictate whether we punish polluters, whether we help struggling single mothers get back on their feet, or whether we incentivize you to buy a house or go green. Every single deduction and credit is a deliberate choice made by the government, telling you exactly how they want you to spend your money. That's it for episode 2. If you found this breakdown of taxes helpful, make sure to like, subscribe, and share it with someone who complains about taxes too much.